Pawan, can you start the recording also? Or
Yes,
RSP?
sir. I think RSP started the live link,
Yeah.
sir.
Sir,
Okay.
it is getting recorded on YouTube directly.
Okay.
You can begin. I'll transfer
Okay.
the host back to Pawan.
Thank you. Thank you.
Before you begin, sir, 1 second. I'm
Yeah.
just changing the settings. Anyone else who needs to speak?
Yashwant Rao, sir.
Yashwant Rao, sir. is there.
But he hasn't joined it. Sir has joined.
Yeah. Just making Dr. Yashwant also co-host.
Yeah.
And along with that, I'm just renaming. Pawan, are you IAP TCP webinars?
Correct.
Yeah, I'm just renaming you and
Yeah, thank you, RSP. So, Ajay,
anyone
sir,
else
good
to
go.
speak? Anyone else to speak in the beginning?
Yeah.
No, I think this is
That's all right.
Yeah.
So let me just change the settings. You all can unmute yourself later on. All right, 1 second.
right.
Good to start.
Yeah.
You can go ahead, Dr. Ajay Kumar.
Yeah. Thank you very much. Welcome to this PATS Pediatric Academy of Telangana's financial fitness, financial intelligence to the pediatricians series 2. And today we have a topic 2 on insurance. This is a series of virtual program which we are doing it from past 2.5, 3 years. And it is a big popularity. It is increasing day by day. It is just to spread the financial education and awareness virtually in the personal finance sector. We have started last time with a first topic on financial planning by Dr. Indira Pawan. And this is being done under the aegis of Pediatric Academy of Telangana's Presidential Action Plan 2023 under the able guidance of President Dr. Alladi Yashwant Rao. We already had a small workshop sometime back under the PATS aegis, wherein the 6 speakers were there with various topics. We thought of also having similar topics with different speakers from all over India. Our own pediatrician faculty and fraternity friends. And we have today Dr. Ajay Kumar Gupta, who's a vice president of the Indian Academy of Pediatrics Delhi branch. He was the executive board member of Central Indian Academy of Pediatrics 2021 and 2022. There's a national coordinator mission Kovin Uday of 2021. He was a president. He's a president of East Delhi 2022. He's a trainer in the various academic program of Indian Academy of Pediatrics, COPP, NRP, NTEP, and MKU, NC, and ECD, and Life Beyond Pediatrics. He is an active enthusiast in finance, I should say, and I've heard him talking on this particular subject earlier in the North Zone IAP workshop on finance. And I can assure you the depth of the subject with Dr. Ajay Kumar Gupta sir has, and we will all benefit it from today with his presentation. He is a director of his Muskan Clinic in Delhi. I now invite our president, Dr. Alladi Yashwant Rao sir, to say a few opening remarks of this wonderful program, which is encouraged and continuing from the last 2 years. Over
sir,
to
Ajay sir, thank you.
Sir.
Thank you, Ajay sir. Really, it's a great initiative by Dr. Surendranath earlier. I am carrying forward the legacy of Surendranath. Today we have important thing, insurance. I know a lot of doctors do not have an idea about insurance, which to buy. People are more or less towards ULIPs. They don't know. People come on, ask us endowment policies on LIC. So all this will be briefed, and I have one good friend of mine, Ajay Kumar Gupta, who has been our EB member too along with me. we are going to have a really Sunday evening academic feast under the able guidance of Dr. Ajay. Earlier, this talk has happened also, but still we have a lot to go. Thank you, sir.
Yeah. Thank you very much, Dr. Yashwant, for your encouragement and kind words on the opening remarks of this today's topic on insurance, all about insurance. And we have a star speaker, Dr. Ajay Kumar Gupta, sir, who has been kind enough to grace the occasion and give us the brief introduction of the insurance. The depth is so big and so wide, but still, I'm sure we will get inspired and knowledge given by Dr. Ajay Kumar Gupta, sir. All the questions can be put in the chat box. And if you have time, we have unlimited time today, but the limited seats capacity, if the time permits, we'll definitely have question and answer session at the end of the session by Dr. Gupta. And you can also put some questions in the chat box. If time permits, I will pick up some important questions and put forward for discussion in this group at the end of the talk. I now hand over the platform to Dr. Ajay Kumar Gupta, sir, to begin his topic today on insurance. Over to Dr. Ajay Kumar Gupta, sir.
Thank you, Dr. Ajay, sir, and I thank Telangana's IAP Society, especially Dr. Yashwant Rao, whom I have been associated for a very long time now, and Dr. Pawan Kalyan, sir, and Dr. RSV Shri Krishna. So insurance is a vast topic, but most of the time insurance is sold to us. Rather than we asking for which insurance will suit us and how much insurance to take, the agent will come to us and ask, take this insurance, this is very good, you'll get this much of returns. Rather than selling the insurance, most of the time they are selling the investments. So today we are going to talk mainly two insurance things. One is the term insurance, second is the health insurance. Term insurance is about the life insurance, where we do a kind of risk management that if something happens to us, our family should not be at risk of losing their financial status. So this is a kind of risk management where we transfer the risk to the insurance company for some premium. So different kinds of insurance are available. One is the personal, where we take either personal accident insurance. If accident happens, we are not able to earn ourselves. So the insurance company will provide us some reimbursements. Life insurance, if something happens to my life, then the family is not left in the doldrums. Then if we suffer from any medical illness, then we have the health insurance, critical illness, disease-specific insurance are available. And there's a plan called Super Top-Up for bigger expenses. Then as we are doing the medical profession, there's always a risk. So we kind of take indemnity liability insurance. And once we are traveling, especially outside India, then we need to have the regular health insurance will not take care of that expenses if we fall sick once traveling outside India. So we need to have a travel insurance. And the vehicle, home, etc. These are the different insurance which are available. If you go to any online portal, it will show very, very different kinds of insurance policies which are available. But we have to choose whichever is good for us and is beneficial to us. So do I really need life insurance? Yes, I need life insurance if I am earning and I have financial dependents. Say I have 2 kids, then and they are not earning. So we'll need life insurance to take care of their expenses later on. And if I'm married, I have wife and dependents, even then we need the life insurance. And if your parents with you who are not earning, and or yourself, you are a parent and you have dependent kids who are not earning, then we need life insurance. Till what time we need life insurance? Till we are financially independent. So Dr. Ajay sir has been working very hard to make all of us financially independent at an early stage, as early as possible. So in some cases, life insurance may be optional. If I am single, I have no financial dependence. If I'm married and my wife is or my spouse is earning equally good, then and we have no kids, then we don't need an insurance. And if I'm already retired or I'm just nearing the retirement, and I think I have collected enough nest egg, then I don't need an insurance. So once we talk to an insurance agent, there will be different kind of lifetime plans will be available. The simple most, the plain vanilla ice cream kind of plan is the term insurance. Then they will come up with money back where you get all the money back, or you keep on getting money returned to you in installments. Then there are endowment plans, and most popular are the ULIP plans or child plans. But the problem with these ULIP plan and child plan is the insurance risk is very, very less. The sum assureds are very, very less. They will not take care of the financial needs of the family once one is gone. So take a look at this. This is a capital guarantee solution by the AI insurance, where you are paying sum of 10,000 every month, but the life cover is only 12 lakh rupees. That means despite paying 1,20,000 per year, the life cover provided is only 12 lakhs. So if something happens to me, the family is going to get only 12 lakhs of rupees. So compare this with a term insurance. This is a term insurance for 1 crore from ICICI Prudential, where they pay an annual premium of only 28,000, but the cover provided is 1 crore. So this is much better at a very less cost as compared to the ULIP plans, where it was charging around 1,20,000 and providing a cover of 12 lakhs. So multiply that by 8 to provide a cover of 1 crore. It will charge you about 10 lakh rupees per year. So this is one kind of insurance agents will give you this kind of calculations where they give you the return that are provided by the ULIP plans. They calculate at 4% and 8%. But what they hide is the kind of charges that they are being charged. Say over here, the annualized premium is 55,000, but the death benefit only is 5,77,000. So this provides very, very meager life cover, and it will not take care of the expenses for 1 year of the family who is left behind. So one has to be very, very careful in choosing the policy. And because the even in their brochures, they will write in this policy, the investment risk is in investment portfolio is borne by the policy holder. But what we're trying to do is transfer the risk to the insurance company. So we need the term insurance. So what are the benefits of term insurance? It provides large cover at very low cost. But most of these plans, that endowment plan, ULIP plan, money back plans, they are designed to enrich the agents, because the commission in this case, in cases of term insurance, is only around 3 to 5%. Whereas in cases of ULIP plans, they get commissions up to 20 to 30%. So they are never interested in selling this kind of plan, but they will be always interested in selling a ULIP plan or a money back plan. They will even entice you. You will take care of the sum of the premium, you start the policy. In this budget, if you heard carefully in this budget announcements, the insurance proceeds have been made taxable if the premium exceeds 5 lakh. So this has taken the sheen of most of the ULIP plans, and 21 budget also introduced taxes on ULIPs with premium more than 2.5 lakhs. So now companies are trying to promote the term insurance also. So these are some kind of term plans which are available in the market, and we have tried to take out the best features possible and the best possible according to the age. In the age of 25 to 30 years, we'll discuss it a little later why these are the best. Reliance Nippon Life, which is providing the best term insurance, it provides lesser premium and a greater cover. And in 25 to 30 years of range, 30 to 40 years of range, then again from 40 to 50 years of age. Over here, most of the insurance companies are there. There are about 24 insurance companies which do the life insurance. And over here, if you notice that SBI and HDFC are missing because their charges are little on the higher side. So how do we choose a life insurance company? So the main things are, one, we have to look at the premium because these policies have the same terms and conditions. So lower the premium, better it is. And then we have to look at the claim settlement ratio. So what is claim settlement ratio? There are two things in it. One is the policies they are taking care of, like if they have been 100 death claims, whether they have settled all the death claims or not, or if the claim was say 100 crores, whether they have paid back the 100 crores or not. So this is the claim settlement ratio. The higher the claim settlement ratio, the better the insurance company is. So this is the claim settlement ratio of major Indian insurers. Over here, the blue line explains the number of policies serviced and green line explains the benefit amount paid. So in most of the cases, the blue line is crossing the 95%. That means most of the companies are settling most of the insurance claims, but the amount provided may vary, mostly from 85 to 95%. But the best are the Bharti AXA and the Aviva, which are great in terms of paying the claims. So how much cover we need? So like initially I talked about the company was providing, a ULIP plan was providing only 12 lakhs of coverage against some premium of 1,20,000 per year. So this will depend upon my current income. And if I have remaining debts, say I have taken a home loan, car loan, or I have taken any major education loan or anything, then what are kind of debts which are left behind? And what is the earning capacity of my spouse? If the spouse is also earning, so the insurance requirement may be less. If I have any large ticket expenses coming up, say I have to get my child admitted to a professional college, or I have to send him or her to abroad for further studies, or there's a marriage coming in the family, one of the kids is getting married. So these are the large ticket expenses. And whatever assets I have built over the time and whatever savings I have collected over the time, they can be reduced from that. So there are three methods which are available. One is the need-based approach. What kind of need is there? That is add outstanding debt. That is any repayment of education, home or vehicle loan. Add short-term needs, say emergency expenses in case of untimely death. Add lifetime living expenses of the dependents, monthly expenses, children's education, marriage, etc. And minus whatever your expenses were and investments that you have made till now and the assets you have built up till now. Second is the human life value approach. This is the potential income one can earn until retirement, but we have to assume that income will keep on growing every year. And we have also to take inflation into account, because inflation may vary anywhere from 5 to 10%, and it eats away the money like termite. So we have to take care of the inflation also, because if our say monthly expenses are around 50,000 per month, after about 7 years, these are going to be 1 lakh. So we have to accordingly make sure that the money doesn't fall less than they expected. And whatever the personal expenses and the premiums I was supposed to pay, that can be reduced from that amount. So this is the human life value approach. Next is the rule of thumb, where we take insurance, which is about 10 to 12 times of the annual income. This is a simple rule. Say if I'm earning, say 10 lakhs, then around 10 to 12 times. And also most of the insurance company, they will ask for your income tax return of the last 3 years. And they will not provide more than 15 times the annual income. So if someone is not earning anything, they will not provide the term insurance of a great value to that person. So things, but one should know our thumb rule approach is only meant to give you an estimate and not an accurate figure. Most insurance companies provide human life value approach calculator on their websites. The premium arrived at using the need-based approach would be probably less than the income-based approach, because most of the people tend to live within their means, and it is always better to be overinsured rather than underinsured, because enhancing the cover, as we'll discuss later, will be very difficult at a later stage. So what are the premium paying terms? This is either one can have a regular yearly premium payment or a monthly premium payment, which in this case, the charges may be little higher side. And there may be some limited period plans also. The insurance company says you pay us the premium for 10 years and will provide the cover for next 20 years. Or you just pay the premium one time and will provide the cover for next 20 years. But one has to be very, very careful, because in 10-year policy, term paying period, they will charge the premium for the next 20 years. So if something was going to happen to me in the 12th year, but they have already charged the premium for the next 8 years also. So best is to have a regular yearly premium. So do I need life cover till the rest of my life? Because in USA, their policy is called whole life policy. Over here also, they will try to sell you policies which will provide the cover till 70, 80 or 90 years of age. In such cases, we end up paying higher premiums, because higher the term, say if I am 40 years right now, and I'm supposed to pay for the next 50 years. So the premium will be higher, because the insurance company has to take risk for a higher amount of time. But if one is getting the insurance only up to 60 or 65 years of age, term will be less, the premium will also be very less. And for what purpose? If the loss of income is only consideration, then life insurance should last only until retirement. If I am very sure that I'll be able to build up my nest egg by the time of I retire, so the insurance policy term should be, say, 60 years of age or 65 years of age. If I have no financial dependence by 50 years, then I don't need a life insurance cover after that. Here is why: because children would not be dependent on you. They have started earning, they will have their own income streams, and we have achieved most of our long-term goals. Say I have my own house, my own vehicle, my own office or clinic, and by that time I have collected enough retirement kitty as well. So don't need an insurance after that age. Should we review the life coverage at any point of time? Yes, because the circumstances in life will keep in changing over time. Sometimes the income or liabilities may change. We may take another loan, or we may add on some dependent. If the parents are earning earlier and now they are not earning, or they are dependent on you, then the liabilities may increase or decrease. Therefore, we may need to reassess our insurance amount to ensure their dependents have adequate protection. And we may review this coverage every 5 to 7 years. Another term that we are able to hear from the agent is return of premium. So even if you have convinced the agent, because most of the time you'll have to convince the agent to sell you a term insurance, because they are otherwise not interested in it. They will come up with a term called return of premium. Most of the time they will tell you, if you take simple term insurance, you will not get anything back. Say if you have paid premium for next 20 years, and at the end of 20 years, the policy finishes off and you get nothing back. If luckily nothing has happened to me and the family will not get anything, and the policy will finish. So they will tell you, why not take a return of premium policy? Over here, what they will tell you, you take this return of premium policy, and you will get whatever premiums you have paid back after the policy is over. But these plans, they come at a higher cost. Say if the cost of term insurance was around 28,000 per crore, it will be around 50 or 55,000. So instead of paying such high premiums, it would be better to invest, say, in any tax saving instrument, say ELSS. Those are the ATC tax saving mutual fund plans. If take any good plan and it provides a return of 12 to 15%, this is a assumption of explanation purposes. A person 30 years of age buys a term insurance for next 30 years for 1 crore. The regular term plan premium to be paid over the next 30 years will only be 3.18 lakh. Whereas in cases of return of premium policy, it will be 6.28. That means after 30 years of term, the company will give you back 6.28. But if you invest the extra amount, this 3,10,000 amount extra that you have paid, you will be able to generate a return of 55 lakhs after 30 years. So see the huge difference, almost 10 times difference is there. So the company is charging you almost double the premium just to give you back the premium. There's another term which has been made out by the insurance companies. This is a newer innovation. This is called zero cost term plan. What happens is they will ask you to take the term insurance, and if they will tell you if you need to stop the term insurance at any time, we'll return the premium back. So over here, what they do is they will either provide the premium paying term for a very long time, say 40 years, and you need to continue for at least 15 to 20 years before you can stop the term plan. But over here also the premium will be higher. As in the previous explanation, the regular term plan, the premium for the next 30 years will be 3.18 lakh, whereas in cases of zero cost premium, it will be more than 4 lakh. And if you invest the extra amount after 30 years, you're going to get around 16 lakhs as compared to 4 lakhs, which is given by the insurance company. So can I switch my life insurer as happens in health insurance company? Because there's a portability in the health insurance sector, but over here it is not possible. So we have to choose the insurance company very carefully. And if I decide to need a fresh life cover, then I need to pay a higher premium because of the increase in the age and natural uptick in the premiums. So how to enhance our term plan coverage at a later date? There are fewer options are available. One is to take a newer policy, but again, it will have another set of challenges, like and even the medical conditions. If we develop any medical conditions, in the meantime, it will increase our premium. The family have to handle the double paperwork. So it will be a very difficult option. Another option is increasing insurance coverage plan, but it is expensive than the option A. In this type, the coverage keeps on gradually increasing, and there is no need for the medical test and possibility of a rejected update. However, the premium amount is higher in the initial years. That is because the insurance company has to consider the increasing coverage amount. Additionally, it depends on our health while purchasing the policy. And if anything happens in between, the policy will get more expensive. So another plan is the life stage plan, increment plan. Here the insurance companies are devised as in different stages of life. If you had no kids initially, then this much cover. If you have one kid, then the cover will increase to this much. And if you have two kids, the cover will increase to this much. So this will keep on, coverage will keep on increasing at critical moments. Say marriage, childbirth, first home, without any additional expenses. And there's no hassle of buying a newer term plan. So it's always better to opt for this kind of cost-effective plan early in the life. So should we buy the policy online or offline? Nowadays, we are getting used to the online purchases, and even the online policy will be cheaper than the offline. But most of our dependents may not be that tech savvy. Say sometimes the spouses, they are not very tech savvy, or the parents may not be very tech savvy. So it's always better to have a offline. This is my personal opinion, so that they can contact somebody who can help them with the paperwork, etc. But premium paid will be little higher as compared to an online term plan. So but they are tech savvy, your dependent spouses are tech savvy, you can go ahead with a online plan also. They both are equally good. So are there any riders available? Can we have certain features added to the term plan? So the most common riders which are useful are the accidental death, critical illness, waiver of premium, or return of premium. Return of premium we have already discussed. It's almost a useless thing. And in cases of accidental death, additional benefits are paid to the family in cases of accidental death. This rider will cost very less, say around 1,000 rupees for a 30-year-old person, and it will provide a great additional coverage. Similarly, critical illness rider, in this, if you are diagnosed with a life-threatening illness, the insurance company will provide coverage with the amount of insurance we have taken, and the cost, say about for a 10 lakh rider, it's about 3,000. There are certain conditions attached to this, like one needs to be diagnosed with a specified illness and doctor's certificate is required. And also one needs to survive for at least 30 days for this kind of benefit to be paid to the family. If anything happens within the 30 days of diagnosis, they will get the sum assured, that is the term policy benefits. So accidental disability, if anything happens to it and our earning capacity is lost, then they will pay additional benefit. A 10 lakh rider will cost around 300 for someone who is 30, will costing about 300 rupees. And by sign waiver of premium is one need not pay future premiums in case of accident. That said, most policies will include this, and because if something happens to us and we are not able to earn more, then this kind of rider helps. This rider comes at around 300 rupees for a 30-year-old person. But nowadays, most of the policies include this built in with their term plans. So how to ensure that the insurance company doesn't reject our claim? This section 45 of the insurance law 2015 ensures that the life insurance company cannot reject our claim provided the term plan is at least 3 years old. They cannot hide behind this was not declared, this was not declared, but it is always better to disclose all our lifestyle choices or pre-existing and past medical conditions. Sometimes they hide behind, you have not told us about the hypertension, or you had any family history, or you have not told this. So it's always better to keep the information accurate and whatever is known to you, and also to update the insurer. If you have been diagnosed with anything in between during the term of the policy also, so it's always better to update the insurer. And in the last, if something happens to us, benefit payout. The insurance companies, they have two kinds of payouts. One is the lump sum. If I was insured for 1 crore, the insurance company will pay 1 crore to the family. Otherwise, they have a staggered payout also. Every year they will get 10 lakh for the next 10 years. But it's always better to go for the lump sum insurance payout so that the family can plan accordingly their finances. So this was most about the term insurance. Now we'll come to the next, that is the health insurance, whereby we try to maintain and take care of the health expenses needs of the family. So most common question is, I'm still young and perfect health. Should I buy a health insurance policy? Yes, it's very important, because in fact, the right time to buy health insurance is when you're in the pink of health and leading a fit life. Early age ensures low premium as health risk is low in younger lives. As one ages, the body gets prone to illness, and hence the morbidity risk gets higher, and so does the premium also increases. It's a universal truth that accident can happen at any time, even for young and old, it can happen to anyone. So we'll need the insurance at that time also. At times, certain ailments remain unknown to us and until their symptoms are visible. So as per regulations, all pre-existing illnesses are covered only after about 3 to 4 years of holding a health policy. So if we take a health policy at an earlier age, most of these conditions will be covered. So what are the things that we need to consider while buying a health insurance policy? One is the type of coverage. Second is sum assured, how much sum assured we need. What is the right time to buy? The right time to buy is right now. So whenever is possible, it's always good to buy at the right time. And till what time the policy can be renewed, and what is the claim process, whether it's a cashless or need to take a reimbursement. So how much cover do I need? We have seen that even during the corona times, there were bills running into lakhs, and depending upon the cities, because in a bigger cities, the cost may be much more. And for 10 to 14 days, one may have to expend like 5 to 10 lakh rupees. So what has been witnessed that during the recent pandemic, one person in the family falls sick, the rest of the members may also fall sick and may require hospitalization at the same time. So buying adequate coverage of about 25 lakhs. And there's one more thing in this. The room rent that is allowed is about 1% of the sum assured. So if you have only sum assured of 5 lakh rupees, so a room rent of 5,000 will be allowed, which is very less for metros, especially for the metros. So one must have at least 15 to 20 lakhs of coverage. Better is to have 25 lakhs of coverage if you are living in tier 1 cities. So what are the different kinds of health plans? One are the indemnity plans, where the insurance company refunds whatever the amount expenses have been made. These can be either individual health insurance, family floater, where the whole family is given the insurance coverage together. Then there are group medical claim policies, where persons working in a company or something, they can take group medical claim. In group medical claim, the premium is little less, and also the features are more as compared to the individual plan. Then we have travel health policies, which are suitable once we are traveling outside India. And there's a super top up. If we think that our expenses are going to be much more as compared to sum assured, we can have a super top up policy also. Then we have defined benefit policies, say critical illness, where a fixed amount is paid by the insurance company if we are diagnosed with a critical illness and we survive that 30-day period. Then there are some insurance schemes which are run by the government also. These are the ESI or RSBY, etc., which are available for the government employees or for the public also, like RSBY. So what are the indemnity plans or defined benefit plans? Indemnity plans reimburse the hospital expenses. Defined benefit plans pay up a lump sum amount irrespective of the actual hospital expense. The indemnity plans, which could be individual health insurance or popularly known as the medical claim policy or a family float policy, should form the core of one's health insurance portfolio. One can top up with a critical illness plan, which is a defined benefit plan, or one may add hospital daily cash plan to meet incidental costs during the hospitalization. Does the policy covers the pre-existing illnesses? A pre-existing exclusion will mean the benefits of health insurance would not be available for any condition, ailment or injury related to condition for which the insured had signs or symptoms or was diagnosed or received medical advice prior to the inception of first policy until the next 48 consecutive months of coverage. So after that, the pre-existing health conditions will be covered. So it will be always better to disclose all pre-existing illnesses while applying for a fresh health policy. What are the added benefits of the health insurance policy? Buying health insurance has another advantage of providing regular free health checkups. So if you have not made any claim for the 3 to 4 years of periods, the company will reimburse the regular health checkup, and the amount is capped at 1% of the sum assured, and hence it's always better to pay the amount exceeding the bill, but better to get a full body checkup done. So additional amount may get a tax benefit also. The insurance premium is covered under the 80D, where the overall limit of 25,000 if you and your spouse are less than 60 years of age, or 50,000 if you or your spouse is more than 60 years of age. Then you get a 80D benefit on the income tax also. But we have to keep an eye on the waiting periods. Once we have taken a policy, no diseases are covered for the first 30 days except accidents. If any accident happens, that is covered from the day one. Also, most of the time the claims are paid only after mandatory hospitalization of 24 hours. Though nowadays even some daycare defined procedures are covered. So, but always better to check up with the insurance company, and most of the time they will require a hospitalization of at least 24 hours. So it's equally important to keep an eye on the ailments and events not included in the policy, because there will be always exclusions. Like if you're participating in a dangerous sport, they will not cover any injuries related to that or any HIV related events. So one has to be aware of the exclusions also. So how to choose health insurance? Again, in this we have incurred claim ratio or percentage of claims paid, timely resolution of claims. What is incurred claim ratio? Incurred claim ratio is if the company is collecting from say 100 customers 1 lakh rupees and it has paid back say 1 lakh of rupees as claims, health insurance claims. So that's a incurred claim ratio of 100%. So we have to be very careful, because most of the public sector health insurance companies like the National, Oriental, United India, New India, they have an incurred claim ratio of more than 100. So they're running in a loss. They're paying more as sum assured in health insurance claims as compared to the premiums they're collecting. This is mostly because of the higher payouts made in the group medical as compared to individual health policies. Because group medical claims, they get more benefits as compared to individual health claims. So this is the incurred claim ratio of private health insurers. Over here, if we see, there are fewer companies like Edelweiss General or Shriram General, which have a better payout ratio as compared to the most of the other companies. And in cases of standalone health insurance companies like Aditya Birla Health or HDFC Ergo or Religare Health, Star Health, the HDFC Ergo is providing a better incurred claim ratio. And what are the percentage of the claims which are resolved by the public and sector insurers? Over here, the New India had the highest in the public sector, that is resolved almost 94% of the claims as compared to 88 to 92 for the other public sector insurance companies. In cases of private health insurers, it varied from 43 to almost 96%. But it's always better to have a track record of the health insurance companies and choose the health insurance company accordingly. So we'll ask where this data is available. This is available at the IRDA website. They release a booklet every year, annual report, whereby this data is given in the end, and it is easily accessible from their website. So what is the percent of claim resolved standalone health insurance companies? Over here, most of the companies resolved more than 90% of the claims, and some companies had even more than 95% of claims resolved. But it is important in how much time they resolve the complaints. So the age analysis of the numbers of claims paid by the public sector insurers, most of the claims were resolved within the 1 year period, except for the national insurance, which took about more than 5% of cases took more than 1 year. In the rest of the cases, around 1 or 2% were resolved in more than 1 year, but most of the claims were resolved within 1 year. And in cases of private insurers, most of the claims were resolved within the 1 year period, except the Reheja company. But most of the claims were resolved within 1 year. And the health insurer, standalone health insurers, they resolved almost 100% of the claims within 1 year. So this is the status of claims as if seen from the IRDA website. From the 21 to 22, if we look here carefully, number of claims which were outstanding at the beginning of the period were about 14,000. 14 lakh claims were outstanding, and amount of more than 5,000 crore was still outstanding. There were newer claims were registered. But over here, one has to look carefully how many claims were rejected or repudiated. So if you look number of claims which are outstanding, they about 848. Newer claims which were made during the time period 21 to 22 was about 50,000. But out of these, around 8,000 claims were rejected. So one has to be very careful with this, how many claims are getting rejected by the company. So what are the best, this is a kind of premium which is available for either individual health policy or a family floater, about 10 lakh rupees. Most Aditya Birla Health or SDFSO, Manipal Cigna Health, these were claims. The term premium was about 9,000 to 11,000. For the family coverage, family floater plan, the coverage provided by the SDFC, the premium was little higher as compared to Aditya Birla or Manipal Cigna. But these were the good insurance plans which are available. But one still has to read the fine print and choose accordingly. So the benefits, as discussed earlier, if the one is below the 60 years of age, then the attendee benefit is around 25,000. And for the parents who are below 26 years of age, you can have claim another 25,000. If parents are more than 60 years of age, you can claim a tax benefit of 50,000. If everyone is more than 60 years of age, then claim of 50,000 and 50,000 as deduction from the income tax can be made. So this is the incurred claim ratio. As we can see, it still varies from about 60% to, for some companies, it can be very, very less. Navy General, which is around 26%. But most of the time, many companies are there running in a loss and have a higher payout ratio, also about 111%. So what are the best health insurers? This is the HDFC Ergo, Bajaj Alliance, Max Bupa, Manipal Cigna, Aditya Birla Health. Thank you very much.
Wonderful exposition and presentation. Thank you very much, Dr. Ajay Kumar Gupta, sir. The depth of you mined the information about the term insurance and also about the health insurance. Thank you very much for your wonderful presentation. I have a couple of questions in the chat box, sir. Kindly help us in seeing if you can clarify them. I saw one question by a senior IAP member who said, this is what we have seen is very good for 60 years and below. What about senior citizens and above, say super seniors, 65, 68 years? Any health insurance you think is a possibility or recommendation you have?
So for there are no specific disease-specific health insurance policies are also available.
Yeah.
So for a diabetic person, they can have a disease-specific because at this time, this age, if one goes for a fresh insurance, the premium will be very, very high. But if one takes the disease specific, say taking care of the diabetes and associated problem, So that will provide a better coverage and with a reasonable premium. So it's always better at this age to go for a disease-specific insurance.
So what is the age limit, sir? We can go for any age limit, you think? Do they have any particular?
Most of these, they cover till 70 years of age. Only that is the advantage of taking the policy at a younger age, because then the renewability is available till the time one can keep on renewing. Then they cannot refuse.
Yeah. So I
the
just read
insurance-
it. I read it little earlier. They said that if you are continuing and if you cross your age and you have insured before 60 and you're continuing to pay the premium regularly, it can continue up to 70 years also. That's what I read a law sometime back. So there is one more question. I don't know if it is, we can answer this properly or not. Any health insurance recommended by Indian Academy of Pediatrics in your mind, sir?
There was one tie-up with the Cover You.
Cover you. Yes,
Yeah.
sir.
Cover you, yeah. ICICI.
So
Yeah.
maybe
So-
I can show you a little thing about that Cover You. But now the IAP has come out of that. Initially used to have, but
Why,
now,
sir? Why? Any reason? Because we have registered in that through Cover You because it's from IAP. Any
Hmm.
reason for why they disconnected?
I don't know why it was discontinued, but I think they used to have tie-up, like they used to provide the data, and the company started sending the messages on its own to all the members without renewing the contract with the IAP. So that is the problem with that, because they started approaching all the members on their own.
Yeah, I think there was some terms and conditions violation. Sir, we have a senior neonatologist, Dr. Suresh Surupineni. He was also who presented a last time in our workshop topic of insurance. I request Dr. Suresh to unmute himself if possible, and you can ask your question. He asked about linking the term insurance with loans, home loans.
Yes.
I think his
Actually-
question is that, sir.
Yeah. Actually,
And-
once you take a home loan, many of these home loan companies, they link it to the term insurance. The problem is they charge a very high premium for that, and the coverage will keep on decreasing with the loan amount. They will cover the only the loan amount. So it's always better to have a independent term insurance cover. Say if you have taken a home loan of 50 lakhs, but if you buy a term insurance of 1 crore, that will give you much better coverage. And over the time, as soon as the home loan is decreasing, you'll not, it will provide only the decreasing amount of term insurance coverage. So you will not be able to buy a term insurance at a later date because the premium will be very, very high. So instead of linking the loan amount to the term insurance, it's always better to buy a standalone term insurance, which is higher than the loan amount.
Dr. Suresh, can you unmute yourself? Yeah.
Sir, I can unmute now, sir.
Yeah.
Can you hear me?
Yeah.
Yes, sir. Yes, sir.
Sir, we have taken a loan, say, for approximately 1 crore.
Yes.
So the term insurance also is provided by the same company. So this was, for example, I'm telling one nationalized bank.
Okay.
So what they do is first lion will be them, not the family.
Okay.
So, and they charge premium for total duration. Means
Yes.
if loan duration is 20 years. For young people who are buying their houses and all, because these term insurances are taken with 3 instances. One, people who are very active, who listen to lectures like this and then go for insurance.
Okay.
Second, who are celebrities, who are fearing that this income may not be there later.
Mhm.
Third, whenever any loan is there, loan person wants another security, means he wants insurance. Nowadays, all lenders are giving insurance, term insurance linked to this, because they will get more money, as well as we pay premium unknowingly because it's paid from the loan, not from our pocket directly.
So it's always better to show them that we have taken this insurance and
Yeah.
this is the coverage which is provided, because they are going to charge one-time insurance for the next 20 years,
Yeah.
and they will reduce it from the loan amount.
Yeah, that is the problem, sir. Because upfront we are paying the total amount rather than paying
Yes.
it yearly,
So
which will be a
it's
huge
always-
difference.
Yeah.
So
it's
never
always-
to go for that covers whenever
Yes.
we are taking a
And
loan. That is
after
one.
15 years, that coverage will be only 5 lakh rupees, which is the principal amount remaining.
Yeah. And another problem with this, sir, whenever we take such loan, if you foreclose the loan,
The premium is already paid.
premium is already paid. So at that time, we can approach that life insurance company to change the lion name from their cover to your family.
But after 5 years, it will become almost negligible because that is a decreasing term coverage loan.
Yes, sir. Mm.
It's not providing 1 crore for the whole 20 years. It's
No,
only 1
but
crore in the
The-
first year, then 95 in the next year, 90
Yeah,
in the third year, like that.
yeah, like that. But if you foreclose 5-10 years earlier, then significant amount will be there. You can take back your premium because IRDA clearly says that if you don't want cover, anytime you can get your money back.
But it's always better to go for
There
it.
is an exit class. 3 years you have to wait and then you can get it back.
I told you about that zero cost policy. It's something like that, where
Yeah,
you pay
yeah.
higher premium.
Yeah. And about your 45, sir, you said up to 3 years, it is the prerogative of the insurance company to find out any fault is submitted in the claim for term insurance. After 3 years, even if that person commits suicide, insurance company cannot claim.
Yes.
That is one. And this 24-hour admission for health policy also, today it came in the paper that we can't enforce that.
Yeah, but nowadays many insurance companies are providing daycare plans also. Like
Yes.
some of the daycare plans are covered in that normal health insurance policy.
Yeah.
Sir, there is thank you, Dr. Suresh,
Thank you,
for
sir.
your contribution. There is one question Dr. Pandey is saying, sir, suppose after taking the health insurance, and if you're diagnosed with health problem like hypertension, do you need to notify something new development has happened in your health condition to the insurer?
Yeah, because later date, they can claim that this was pre-existing, that you hid from us and never informed us.
Yeah, I think it's always better to disclose rather than get into problem later on. Dr. Pavan has asked any indemnity, professional indemnity coverages, insurances you recommend or you think it there?
Actually, they have very standardized insurance plans. For pediatricians, they cost around 1 rupee per lakh, I think. It's kind of, so for 1 crore of insurance, pediatricians pay around 1,700 rupees. But for the surgeons, say for gynecologists or surgeons, it's almost double of that amount. And it is same for all the insurance companies. It's a standardized insurance. So one can go for any agent which is known to them. There are certain companies which provide the legal services also along with it, that I think the local IMA can negotiate.
I think even IMA and IAP both have got professional indemnity coverage also. That is worth joining, I think. Sir, one Dr. Anita has asked, she took the Cover You insurance sometime earlier and it is due for renewal. With your information that Cover You is not being now anymore encouraged by IAP, should she go for the same insurance or change the insurer?
The health insurance policy is portable. So you can either choose the same insurer or you go to any other health insurer, which one thinks is providing better services.
So it's a portable. That's what the key message is there, sir, is giving.
Yes.
We also have a family benefit scheme in IAP and also in IMA. I think they are also, I feel, are good for our members who are within the range below 60 years.
Yes.
Any more questions? Pavan, you want to, Dr. Pavan? So, any more questions from the audience, from the participants? Yeah, there, sir. I think we have covered almost all the questions mentioned here, sir. And I take this privilege on behalf of Pediatric Academy of Telangana, F3 group, to thank you from the bottom of my heart for giving such an excellent presentation. And sir, kindly help us in answering the questions which we have kept a very unique way in our WhatsApp group. If they keep
Sure, sir.
coming on insurance for next 1 week at least, sir, kindly
Sure,
spare
sir.
your time to
Yeah, yeah,
answer
I'll keep
the
on checking.
question, which may
Yeah.
come later on in the mind of the participants.
Sure,
So
sure.
to briefly try to cover
I
up
think
some next one.
you have made a YouTube link also. If that link can be shared with the members.
Yeah, we do.
Okay.
We will, sir.
Yes,
We
sir.
will share that. Thank you very much,
Sir
sir.
Ajay sir, thank you so much, sir, for wonderful
Thank
talk.
you,
I think
Dr.
lot of
Pawan.
doubts were there. Sir, one more doubt before closing. But in the term insurance, they won't tell us this like Marriage Women Protection Act, something like that is there. No, sir, we missed it actually.
Yeah.
Nobody told, and the insurance person won't tell about that. MP, the Marriage Women Protection Act, something is there, no, sir? I think we need to tick it. That mistake everybody should not do before
In that
signing
case,
the
what
term
happens
insurance.
is if say there's a husband and wife are there and divorce happens, the nominee remains the first wife, even if the person has remarried. So one has to be careful in that, ticking in that.
What, sir? How it is like?
Say if there's a couple and the husband has taken a insurance policy,
Right.
and somehow they get divorced and the person remarries.
Right.
But the beneficiary will remain the first wife if that clause is not ticked off.
I said not ticked off.
So one has
If it is ticked off, if it is ticked means like, you want us to put it on or off? How it is, sir? Like,
well, then you can define, you can assign the policy as per your will to anyone.
correct,
The
correct.
benefit will go to that person.
Acha, but if MWPA Act, if it is that we sticked, I think that thing won't be there. That's what you mean to say?
Yeah.
That is mainly what they say is in case if you are you have debts also, like in terms of thing, the banks can come and take that amount, the insured amount, they can recover the loans if you have any loans. But if you put that MWPA Act, the banks don't have any authority to take that, even if you are a defaulter.
Yeah, that becomes Istri Dhan.
Pardon, sir?
It's called Istri Dhan in the legal terms.
Okay.
The company cannot claim it from them.
That's why I think we need to put that MWPA thing. I think that we should not forget. That's what they say.
Yeah.
It's a mistake most of us usually do.
But I'll give more clarification later. I'll put it in the group.
Correct, sir. Right, sir. Right, sir.
Yeah, last time I think somebody has also mentioned about that clause, sir, to tick that particular thing. Even if your property is going for claim by the lenders, this particular insurance will not be claimed or impounded by the lenders or taken away. It will be still have the benefit on the dependent. That is what I think what Dr. Pawan.
Correct, sir. Correct.
Yeah. So wonderful, sir. Thank you very much. It was a nice session and we had a lot of learning point, and we will try and see if we can utilize your knowledge for next 1 week in our WhatsApp group also to the benefit of the participants. As you are noticing, sir, we have got almost 800 participants now in the WhatsApp, and it is growing every day. So the popularity of this financial intelligence among the pediatricians is very much needed. Thank you very much, sir.
Today itself, I think more than 150 new people have joined the financial fitness group, sir. Today
and
itself.
Dr. Pawan is our sheet anchor person who's coordinated last F3 session 1. And this time also he's coordinating and helping us. Dr. Pawan, thank you very much. And Dr.
Thank you, sir.
Thank you. His children in the hostel, still he has paid time to help us in the recording purpose and also for the YouTube link and also for the today's session and spreading the news among the various groups. Dr. Pawan, thank you very much. I thank you, sir. Yashwant Rao, our president, and all the participants who have made this today's program very successful. Thank you very much. See you later. Next topic will be announced soon. Keep a watch out. Dr. Yashwant Rao, sir, closing remarks. Dr. Yashwant Rao, sir. Unmute, sir. Unmute. Can you unmute, sir? Let me see if I can unmute you here.
I think you'll have to make him co-host.
Yeah. I'm just, yeah. I'll just unmute him. Yeah, you are unmuted.
Yeah, thank you, Ajay sir, both Ajay sirs, for taking wonderful time on the Sunday evening and trying to fine tune our insurance knowledges, all our participants across India. I thank Ajay sir for extending one more week for clearing all the doubts which our colleagues will be requesting you. Thank you, Ajay sir, and
Welcome.
Pawan for helping us out.
Thank you. Thank you for giving me this opportunity.
Thank you.
Thank
Sir.
you so much.
Thank you.
Thank you, sir.
Thank you.
Bye.
Yes.